So basically, the company is just sending money to your brokerage account. They're sending money to your investment.
Top 5 dividend stock that will pay you $1,000 a month. Perhaps you're new to the stock market, or maybe you're just looking to invest in stocks that will repay you with a significant amount in dividends so that you can at least make $1,000 every month passive income. Then you'll get to know that you have come to the right place, because in this video we're sharing with you our top selections of the best 5 dividend stocks that will pay you $1,000 a month. Before getting started, here's a little background on how investing works in the stock market. Big risk, big rewards is the main principle that all world's share market function upon. Simply put, if you invest, say, a certain amount of money towards buying the stocks of a particular companies, and the value of that share grows or even multiplies over the week, the profit that you make will grow accordingly. So if you put in $50 and it doubles, you get $100. If you put $50,000, you can buy the latest Porsche Taycan 4S. However, it's just not that simple. Stock prices, and hence your money, can go both ways in the share market. There's a good chance that the prices may tank as well, making you to have to go back driving that old station wagon. Basically, the more you invest, the greater is your risk. But if Lady Luck works in your favor, there's a big check waiting for you once you sell. So what exactly are stocks and dividends, and how can they help you in the long run? It's crucial to understand what dividend stocks exactly are before we go ahead with this top 5 list of big dividend shares. Let me tell you what a stock dividend is and exactly how it works. A stock dividend is the type of dividend paid to its shareholders in the form of stock rather than cash. Although it may reduce one's per share earnings, share dividends have a major benefit of rewarding all investors without decreasing the company's cash balance at all. Dividends also serve as a continuous and reliable income source for shareholders. That's why investing in high dividend yields equities makes a lot of sense. Most often, dividends earned are reinvested into the stock market by those looking to expand their revenue gains. Nevertheless, dividend shares also come with their own investment risk and are always subject to policy changes among other factors. This raises another question: why buy these dividend stocks to begin with? The answer: dividend-paying shares can prove to be a consistent and growing source of revenue. In order to help keep up with inflations, investors often wish to put their money into companies that provide increasing dividends to its shareholders. Several prominent firms that no longer require reinvesting as much money towards their businesses are most likely to start pay dividends. Companies in high-worth industry such as airlines, technology, or biotech firms rarely pay dividends, as they need to reinvest their own revenue towards themselves in order to keep growing. I believe you know enough for us to get started with our list. But before we move on, remember, always do your own research before you start investing. Now that we got that out of the way. Number 5. Coca-Cola. Coca-Cola is a 135-year-old corporation best known for selling soda all over the world. There's probably no one in the world who hasn't heard of the company. Coca-Cola has a strong track record of growing dividends. The corporation said in February that it will increase the quarterly payment by a penny to $0.42 per share. This makes it 59 years in a row that the payment had been increased. When a corporation hit the half-century mark, it is designated as a dividend king. There were only 27 companies on this esteemed list in 2020. While this is commendable, many corporations have been increasing dividends for years, only to have shareholders receive a nasty surprise one day. Still, this is a wonderful place to start because it demonstrates how important the dividend is to the Coca-Cola company, as seen by the fact that it has increased it during difficult times in the past, including recessions and a global pandemic. Coca-Cola's adjusted sales declined by 9% in 2020. Despite flat operating profits, even in a challenging year, it managed to generate $8.7 billion in a free cash flow, which meant it had enough $7 billion in dividends to its shareholders. Coca-Cola pays 3.08% dividend yield, which is more than double the S&P 500's 1.5% payout. For all of those who wish to buy a good dividend-paying stock, Coca-Cola is an excellent first choice. Number 4. Johnson & Johnson. You can get a picture of how much recurring revenue a particular stock can provide for the shareholder if you glance at its present dividend yield. Dividend growth is crucial because if a company's payout increase, your regular income will increase over time. But if a company's dividend stays the same, inflation will eat away your earnings over time. Johnson & Johnson, another dividend king, is a firm that falls under the former category. For more than 50 years, the corporation has increased its dividend payments. It is one of the top dividend growth companies on the market right now. I'll also look at how much recurring income you could generate from the stock over the following 5 years in the section below. Johnson & Johnson stated in April of this year that it would increase its dividend for the 59th year in a row. The healthcare company's quarterly dividend payments have increased to $1.06 per share, up from $1.01 previously. With a share price of roughly $170, the stock yields about 2.5%, which is far above the S&P 500's 1.4% average. The dividend is now attractive, but if Johnson & Johnson keeps increasing its dividend, it's soon to become super lucrative in the future. So, for all of you smart investors, J&J may just be the way. Number 3. Target. 2020 will certainly be remembered as a turning point for retail behemoth Target. The company's business and stock demonstrated that it is a big force. As if to add a cherry on the top of those achievements, Target recently increased their quarterly dividend by 32%, making 2021 the 50th consecutive year with a dividend increase. There's more to the Target than just rising dividend. Target gained considerably from the pandemic's increased demand in 2020 in comparison to the previous year. Target's total revenue increased by $15 billion. That's more than the company's sales have increased in the previous 11 years combined. And this trend is expected to continue, according to the company. Target's management expect comparable store sales to expand by 20% in the second half of 2021, on top of the 20% growth seen in the pandemic-affected second half of 2020. And if you remember what we said earlier, the more the revenue, the greater the dividend. So take this upwards investment escalator and go grab yourself some hot Target shares. Number 2. NextEra Energy. NextEra Energy provides diversifications with just a single investment. It's the parent company of the prominent electric companies Florida Power & Light and the Gulf Power, as well as NextEra Energy Resources, a renewable energy subsidiary. The reliability of NextEra dividends is comparable of that utility. Although the 2% yield may seem low, it is quite rapidly climbing. NextEra adjusted earnings per share have increased by 14% year over year in the first quarter of 2021. This was greatly beyond what investors normally expect from utilities. After gaining 10.5% in 2020, the company has urged investors to expect yearly earnings growth of between 6 and 8% all the way through 2023. NextEra stated that it aims to enhance its yearly dividend per share according to this rising graph in the near future. The company aims to keep increasing its yearly dividend per share by around 10% at least by 2022. The train is about to get moving, and if you were to rely on the experts, boarding on the stock locomotive is an easy way to reach the land of the $1,000 per month. Number 1. Realty income. Real estate investment trusts are a good place for income investors to seek for strong companies that pay consistently and grow their dividends on a regular basis. One of the first company that comes to mind is Realty Income. Realty Income is a dividend aristocrat, divine S&P 500 firm that has increased its dividend for at least 25 years in a row. It's also one of the few companies that pays monthly dividends and is proud of it. Having trademarked the term monthly dividend company, it has increased its dividend for 93 consecutive quarters. The dividend yield is 4.2% if you analyze its current monthly payout of $0.235 per share. You receive both stability and yield with Realty Income, which is rare to come by these days. As a result, it should be one of the first REITs that a dividend investors like yourself should look at. If not, just as a great dividend stock itself. Like this recent stock market news and would like to stay updated with us? Then do give us a like and hit that subscribe button. Also, if you feel we are missing out on anything and want us to cover about it in our next video, then let us know in the comment section below.